Hey everyone, it's Mike, and this video is about the Delta Scalper, and particularly the Delta Scalper running on NT8. Now, recently I've been in a couple conversations with some users about settings, and what settings I prefer to use, what settings other people use, and how can it help improve their trading. Now, I don't want to say it really depends on what market you're looking at, because I like I believe that for an indicator to be legitimate, it has to work in different markets on different time frames. You can't say, well, this indicator only works on crude oil on a 30-second chart. I mean, that's over time, that's not going to be very good, very strong, because what you're doing is you're just taking a period in the past and you're basically curve fitting your system around that period. It's like you just happen to find the one time period that it worked on for a while. Okay, but again, for something to be good and work over time and be successful in the long haul, it's got to work on different markets over different time frames, different chart types, with the same settings. You can't say, well, in this market I only use this setting, or this market I only use this setting. No, it's not going to be very effective over the long haul. And as a trader, that's what being successful is about: surviving the long haul, not a short period of time. So when you load up the Delta Scalper and you click on the indicator, you'll see the properties here. There's look back bars. So the ones you really need to be concerned with are just the properties up in here. So look back bars, negative delta, positive delta, strength. You don't really need to be concerned with signal box height. That just deals with how the indicator fires up on your chart. Signal box opacity, it depends how darker you want it. I think the default is set to 20. Sometimes depending on what background you set your chart to, you may want it a little bit darker, you may want it a little bit lighter. If you use a white background, you may want it a little bit darker. Signal box width, that's how far you want this box to draw out. Now that's really important if you like to play pullbacks, right? So you want to know within a certain amount of bars if you're going to get a pullback, or if you're playing it as support or resistance. What is signal mark displacement? Is 2. It's just how far off the top of the bar you want that. Signal only on higher, this would be that's higher highs or lower lows, is if you put your cursor over it. And I'll explain that in a minute. That goes back to the look back bars. So if you disable it, you're going to get a lot more signals than if you have it enabled. So here I disabled it so you can see how it's going to look here in a second. Just close that down. So you'll see there's going to be a ton more signals basically popping up when it comes up. I've got how many data? I think on this one I've got several weeks of data on the chart, so it takes a while to go back through the data to read it. But once you load your chart, it's there. It's not going to keep recalculating or anything. And since if you have it appearing, if you disable that button, right, not on higher highs or lower lows, I said you're going to get a lot more signals, and that's why it's taking a lot longer for it to load right up in here. I don't want to pause there. There you go. Because if I pause it, then you won't see how long it took. So it took about 20 seconds. But you can see how you're getting all these signals in here. And honestly, that's going to be a heck of a lot more confusing. Maybe if you're a pure scalper. Now this is a E-mini 5 range chart. And it's not every signal you'd be taking a short on. You'd be following it. You get long here, then you got short. You're not gonna get short again. It really depends on your trading style. Me, I don't like it. I like to use it as a reversal indicator. So if you're going to use it as a reversal indicator, you go back into the settings and you click that box there, and then that's going to read this box up here, look back bars. Look back bars, you could set default is set to 7, I believe, but if you use a higher number, so here, right, I'm going to use 25. It's going to look back over the last 25 bars, and it's got to be a higher high or a lower low. So you click OK, and we'll see what appears, if anything. Let's give it a second here. Okay. Again, it's got to do the calculations over that whole period. So if you're using like a if you're just looking back over the last couple of days, then it'll appear really fast. I said I've got several weeks of data. It's got to go through it all before it'll pop up on the chart. But again, I don't want to just pause this video while it's doing it. I want you to see in real time, so you get a feeling of how long it can take or not take. So there you go. Okay, so again, this is so again, it's, what's it, today's Thursday, July 5th. It's around 9:30 in the morning right now, and you can see, again, 5-range chart. Just going back, you can see a lot less signals when you have that filter on. And again, I'm looking for, potential reversals in the market. So I mean, you get this nice trade here. This one kind of goes sideways, Again, you catch this nice move down here. You're talking 2732 area, all the way down to the 27, below 2720. That's a 10-point move. Now there are days, don't get a hard on thinking that every day is going to be like this. There's going to be some days where you struggle. You have, take a loss here. Depending on where your stop is, maybe you took a loss, maybe you didn't. Me, I like to keep my stops tight. I'm looking for the pure reversal, but you're getting long at 06, taking it maybe up to in here at 12. You got the pullback down here, even though you went higher. But again, it depends on your trading plan and how you're trading it. I don't want to say, you have to trade it this way, because, there are people that like to trade it like this. They know they got a level here, and they'll throw offers up in here, waiting for the pullback to come up in here to get short again, rather than just being aggressive and getting long or short right after the signal is given. Like here, they get, you got a sell signal here. They just throw an offer back in here, the 30, I don't know what that is, 38, 39 level, and it comes down 5 points. This one would have been stopped out if you got aggressive. If you're looking for a pullback immediately in here, you're not going to get it in this bar off this signal. But then if you're not aggressive, you miss the trade. Me, I like to be a little bit more aggressive, but again, it depends on your trading style and your trading plan, more importantly. So this is a 5-range chart. Now, the other question I get is, well, which chart type is better? Is it minute-based chart or range-based chart, or what? And me, I prefer range-based charts because I like to see how price moves from one price level to another price level, rather than it's 10:21. Okay, now it's time to form a new bar because I'm looking at a 1-minute chart. Let's take a look at a 1-minute chart here. Again, the same settings that I'm using on the 1-minute chart. So you see how the 1-minute chart pops up in here. Again, give it a, again, it's still got to go through the calculations for the indicator over the last 15 days of data that I have loaded on this chart. So it's going to take a few minutes. So again, this is how it looks on a 1-minute chart. Now, honestly, for me, when trading a contract like the E-minis, can you trade it at overnight session? Yes, you can, but obviously, there's going to be a big difference in volume. You can see how this is the evening session. Granted, this was July 4th, coming into July 5th in here. So this is July 5th evening or morning session, 6 in the morning. Whereas you can see here at 8:30 how much bigger the bars are. There's just a heck of a lot more volume. And when you're dealing with delta, it's probably better to have more data than less data, because if you're looking at some bars may have a delta of 20, like at this time at night at 11 o'clock, 11:30, midnight, you're probably getting even though you're getting signals, right? It's reading the delta. The underlying volume is not as great during the day. Now, is that to say it's better or worse? Again, that's up for you to decide on how you trade. You do get good signals though, in the evening session sometimes. But again, Europe, sometimes you get very thin volume, like here. Sometimes you get very nice volume and ranges. But again, it really depends on your trading style and how you trade, how you approach the market. There's no one right way to approach the market. Sometimes people get so caught up in trying to find the right time frame. They'll sit there, they'll trade a 5-minute chart, they'll take a bunch of losses and say, well, I gotta dig deeper, I gotta get the microscope out. The next thing you know, they're looking at a 1-minute chart or a 30-second chart, and they're not sticking to what they know and their own psychological makeup. Because if you're trading a longer time frame and you try to go to a shorter time frame, you're going to struggle because you're going to overanalyze things, and the markets move much differently on a 1-minute time frame than they do on a 5-minute time frame. So now another change I want to talk about, not change, but another setting you can mess around with, so to speak, is the delta strength. So the default is set to 1. You can change it to whatever you want. 2, 3. It's got to be a whole number. So it's like 2, 3, 4, 5. Now to go from 1 to 2, you're doubling it. So if you made it 3, you'd be doubling 2. So it'd actually be a strength of it'd be, the delta would be 4 times as stronger, and so on. So go to 8. If you changed it to 4, you'd be 8 times as strong. So it's doubling it each time you go up. Now, recently I was talking to somebody about the delta strength of 2, and as you make the delta stronger, you're going to get less signals. And again, what's better for you? Do you want more signals? Do you want less signals? And if you go with, if you're somebody that needs a lot of action, so to speak, if you start making it higher, you're going to get less signals, so you're going to get less signals, less activity. But again, you can see here, it's slightly different in terms of the amount of signals. On this day, you had some nice signals, really nice signals. You got this buy right off this low here at the 06 area, all the way up into the 20s. And, sometimes, people will send me a chart and they'll be like, oh, look at this, it didn't give any nice winners in here, or it gave a sell signal here, then came and stopped out. Oh, you're scamming me, because they sometimes, for some reason, people expect every trade to be a winner, and that's the wrong way to approach trading. Not every trade you're ever going to take is going to be a winning trade. There's so many factors outside your control. You don't know when you get short right in here. You think this is a great trading opportunity, and then boom, for whatever reason, an order hits the desk at Goldman Sachs to buy 5,000 E-minis, and no matter what you're doing, you're going to be, you can't beat it, right? And you don't know when it's going to happen. But that's sort of the unknown factor in trading. There's a lot of unknowns out there. So you can see here it's set to 2 now. There's a bit less signals. This is July 4th, or July 3rd, rather, the day before 4th of July. So it wasn't that great on that day. The evening session on July 4th, you had the early close. It gave some okay signals. Okay, I don't even know what it's looking like this morning. This is the evening session going into July 5th. Here, so you had this one buy signal that didn't work. Not every trade is going to be a nice 20-point winner. You'd like it, but that's just not how things work. Now, let's compare that to, say, a 5-range chart and see how it looks. So again, what's people say, well, what should I use? Should I use a range-based chart? Should I use a minute-based chart? It depends on you. You have to trade the chart type that you're comfortable with. So like in here, it just sort of went sideways there. Again, this is with the setting set at 2, the delta strength set at 2, so you see a lot less signals when it's set at 2, right? You only see a handful of signals. This data is only going back to July 1st, though. But you're just seeing a lot less signals. Are they more accurate? Not necessarily. You know, I mean, you got winner, winner, winner. You know, then you got, you know, winner here. Kind of a sideways there. This one, you know, I'd probably say no, even though it started as a winner. This one, no. And this morning, you know, eventually it's starting to go in that direction. But again, you know, where are you placing your stop? If you're getting short, you know, aggressively in here at 26, yeah, I wouldn't take it all the way up to 30. I wouldn't take a 4-point risk on it, even though, you know, it's, you know, you got the potential to go down, you know, down into the 20s and below 20s. Again, you know, you got to be smart about your stop placements. And, you know, for me, I'd probably place it just right up in here. I would have been stopped out. You know, I would not take 4 points of risk on a 5-range E-mini chart. So, again, you know, it's understanding your risk. So, you know, just really quick, let's take a look at another chart. I'll go back to a minute-based chart. Give it a second here, and then I'll throw in the crude oil. So again, you know, the settings. Where's crude? I don't have it there. Let's see. Whoops. Oh gosh. Okay, give it a second here. So this is crude oil. So 1 minute chart. Again, the settings were look back at 25, delta strength of 2 positive and 2 negative. So you can see here you got a little bit of a pop up here. This one failed. That one failed. You know, this morning though, you got this nice winner from in here, from the 73, 72 area, all the way up to the 90s. You know, right on the reopen, you had to sell. You know, the day before, or what day was that? I don't even know. You know, this one started to work out, came back up here before it fell out of bed in the morning. You know, these just sort of going sideways, not much happening here, but this was the trade you wanted, you know, from the 73, 75 area all the way up into this, you know, above 74.10. Okay, now you see this big move here. I'm just curious. When again, you know, this is when you're starting to deal with the delta strength. You know, sometimes you're going to catch moves if you set it at 1 that you wouldn't otherwise catch if you had it set at 2. I don't know if it's going to catch this move or not, but we'll see. You know, it may have given you a buy right in here for all I know. But again, you know, that's why you got to play you got to have some decent stops. Well, it didn't catch the home. We caught it a little bit earlier. Before it, with the delta strength of 2, it had the sell signal back here. You know, so you caught a little bit of a move before it fell out of bed. You know, this one failed, obviously. That's 6:45 Chicago time. You know, you catch a move, catch this move, 73.70 all the way up to 74.00. You know, so it's giving you some, you know, decent signals. This is on a 1 minute chart. I'll just go back here, bring it back forward. Okay, so this is this morning right now. So now let's compare it to, say, a 5 minute chart. You know, because again, you know, people always say, well, what's a better chart? You know, I trade a 5 minute chart. You know, sometimes, you know, people they have already a chart type that they trade, and you know, they want to stick with it and see if it's going to work or not, basically. So let's see here. It's got to go back through the data. It's still calculating. I can tell when it's calculating when I move the chart, whatever you call it there, thing here. So again, you know, on the 5 minute chart, it caught that move from 74.60 down to 73 bucks. That you didn't get on the other chart. You know, here you got, you know, give you a short, but then you get stopped out here. Here, this one started to work out, then it failed. So you know, you would have caught that move. And just go back. It's when I reloaded this chart, it's only giving me just a few days instead of the whole 15 days. But The other important thing to keep in mind is you have to enable this. You have to click tick replay. That's very important, because if you don't have it ticked, enabled, then nothing's going to happen. You're not going to get any indications on your chart at all. But you have to enable tick replay so that the historical data for the order flow will be accurate and it can run the analysis properly. So let's see how it's, let's go back again, another week, another 10 days rather, and see how it worked out. Again, I mean, looking back over 1 or 2 days isn't always useful. You want to go back as many days as possible to get a good, accurate depiction of what you're looking at and what you're going to be basing your trading decisions on. So again, it's just doing its calculations. It's a 5-minute chart. Okay, nothing yet. Again, I could tell it's still calculating just because it has this cursor here is working there. Okay. So just going back a bit longer, on a 5-minute chart. Again, me personally, I don't trade a 5-minute chart, but people were asking me how it looks on a 5-minute chart, so I wanted to show it to you. Because I'm not the type of person that would get long here at what is that, like 7 p.m. at night and hold it all the way up until 7 in the morning. That's I don't have the time to do that. I'm more of a, I don't say hit and run trader, but I'm somebody that's just going to be in and out as quickly as possible. So just go back to the settings, what they were set at. I think this was 1, yeah. So 1, 1, and 25, 1, and 1. Now, again, when it comes down to range-based charts, people say, well, what's the best range-based chart to use? Most people are familiar with minute-based charts. Should I use a 1-minute chart, a 5-minute chart? Again, when you're dealing with range-based charts, 5 range, 8 range, 10 range. For most markets, I stick to either a 4 range or 5 range, like on E-mini S&Ps, and grains. Most grains I stick to a 4 range chart because it moves in quarters, and 4 quarters equals $1. But on crude, I prefer an 8 range chart because it's a little bit more volatile than some of these other markets like grains. But again, it comes down to you, what you're comfortable with. I know some people that like to use a 3 range chart on crude oil, and it leaves me scratching my head because I'm like, oh, that's very fast. How can you you got to be like not a robot, but you got to be able to make your decisions very quickly. And a lot of people are slow. But I mean, if you have it programmed in there to fire off buys or sells as soon as the bars close, okay, then. But if you're manually clicking, I think you're going to be left way behind the curve. So this is an 8 range chart. This is it set at 1. Is there some signals? Yeah, you get some. Again, you're getting a buy, you getting stopped out here on the sell. You get this buy, you get stopped out, you got this sell. again, where you place your stop. Maybe you're not stopped out. You got a nice buy here. You got a nice sell here, nice little buy here. This one would stop you out. And then again, the difference between the range-based chart and a minute-based chart as well is when you're dealing with a range-based chart, one bar can be formed in 5 seconds, or you're not going to get that on a minute-based chart because it's constricted to the time. If you're on a 1 minute chart, you need 60 seconds, but on a range-based chart, it's moving. Bars are forming as price is moving. So if you're in a fast market situation and you're covering 50 cents over 5 seconds, you'll have what is that, 5 or 6 bars being formed in that 5 seconds. And that's what I'm talking about, being fast. Like in this move, I don't know how long it took, but just really just expanded a bit here. 801 to 802, it's gone from 73.60 basically all the way up to 73.75. But over that time period, it's how many bars? It's 3 bars. And you get times like that with when you're dealing with range-based charts that you're not going to obviously see on minute-based charts just because of how it's formed. So that's a delta scalper, and again it's designed for futures. It's the data that comes out of the CME exchange is different than the data you're going to get for Forex. So if you're trading Forex, it might be different. I mean, if you're trading Forex, you could trade Euro currency. Let's take a look at the Euro currency contract here, the 6E. It's a futures contract on the Euro versus the dollar. I mean, you can trade that, and you don't necessarily need to be restricted to trading, FXCM or any other brokerage, thinking that I can only trade Forex through there. No, I mean you can trade it on you can trade the futures contracts. So what is this setting? Is 1. I mean you're getting some decent signals. Yeah, you're getting some decent signals. 166, 50, all the way up to the close here at 10. You do get stopped out in here. This one was stopped you out. It started going in your favor, then stopped you out. Again, started going in your favor, stopped you out. Again, this I'm just looking at the last until what is that, July 3rd, basically the last 2 days, more or less. But again, that's what the setting at 1. If you were to set the setting, and again, this is a range-based chart. If you set the setting at 2, you probably get slightly less signals. I don't know if they're better. I haven't looked recently at this chart on a setting of 2, but I'm sure you're going to get fewer signals. So yeah, so instead of getting all those crappy signals, you got those 2, but instead of getting the one that failed earlier, you just have this one here at 10 o'clock. This is where you got to play a little defense in there, capital preservation. You got this nice trade here. This one worked out a bit. Again, what's your trading plan? That's where a lot of traders screw up, basically, is they don't have a trading plan in place, so they don't know how to react when the market does this. You should be getting out. Don't sit here and wait. No, I'm going to wait for it to come back. If you're not a pullback trader, you're not going to catch. You're going to get stopped out here. If you're a pullback trader, you're not going to get filled here. If you're aggressive, you'll get in as soon as this bar closes, and you can catch the the 15-point move, 15-tick move. If you're a pullback trader, maybe you're getting short in here, with a stop up here. You're gonna have a tighter stop. But no matter what, if you're a pullback trader, you're gonna get stopped out here. If you're an aggressive trader, you're gonna get stopped out here. So again, it really depends on your trading style and you as a trader. I mean, not every day is going to be this nice monster move. It really varies on the type of trading that you do, and the type of chart that you look at. You have to think of each type of chart and each time frame is a different trading plan. Okay, you're trading a minute-based chart. You can't necessarily have the exact same stop levels that you would have on a range-based chart. On a range-based chart, what the levels, what a bar, how big a bar is going to be. On a minute-based chart, you don't know. You get some bars that are 3 ticks, and you get other bars that are 13 ticks. There's a difference of 10 ticks basically. And if you're not not aware of that, not cognizant of that, then you're going to miss out. You're gonna struggle in your trading because you're going to be taking bigger losses than you should, because you're going to take either more, or you're either taking more frequent losses, or you're going to be taking bigger losses, in the sense that your stop is going to be blown out. Now again, people, this is what I'm talking about, pullback. That's why we draw out this zone, because we're looking for people that like to play pullbacks like to play a pullback into the zone. They just throw bins in here, because they're looking at, this is the area where aggressive buying started happening that caused the Delta Scalper to give a buy, and you get this pullback in here. So they're looking for the buying. What their thought process is okay, the market is it's coming off here, and now you're starting to get some aggressive buying coming in. Delta Scalper kicks off, gives you a buy. Okay, market popped up. Now again, the big buyers, the ones that are causing the Delta Scalper to give a signal, they're just not going to continue buying. They're going to buy, then they're going to let the market breathe and come back down in here. But this is that area, this is their target that they were looking to start buying at. Then it starts getting aggressive again. Boom, it starts moving up. Let it breathe again. Boom, it starts moving back up again. So you can see, if you were patient, right, and you're looking to buy, you can be buying it down here at 48, and it's rallying 10 ticks up in here to 58. But again, it really depends on your trading style. That big bar there. Me, I tend to stay away from these types of bars. But even if you said, holy camole, I gotta get in, you got in here at 26, took a little bit of heat down here at 20. You could have rode it up here to where it gave a sell signal at 36. Again, if you're looking for the pullback, it stopped you out. When you're trading pullbacks, you still got to have stops in there. It's not like immediately going to pull back then go back up. Sometimes it's going to keep going lower. It's going to fall apart because that buying that was there earlier is no longer there. Even this, it's interesting because this level, when you scoot it out here, comes out to almost that same level. But again, this was the nice trade to have here from 30 all the way up to 40. Instantly almost. Oh, is this? So this is a minute-based chart. Again, you're getting some signals in here. Again, it's like this, right? You can see how this line is holding. If I were to draw this out, you could draw this out here like this. Where's my drawing tools? F6. So you draw that out there, right? So if you're looking to buy between these two lines, right, and you can see how it just comes right back down in here, right, and it's holding. I'm kind of curious up here. Again, it just touched that line up in here before it sold off again. Again, it came down here, poked down through here, and then rallied back up. But again, these are the trades. If you're patient and you're willing to sit here, and wait for that, like a hunter stalking the market, and you're buying it in here, you can have a very tight stop. This is what 117, 10 and a half right in here, between 10 and a half and 11 and a half. So you're buying it in here at 11. You got a 3-tick stop down here at well, this is moves in half ticks, so we'll call it 4 ticks. So you're buying it at 11. You got to stop down here at 9. What's 9? That is probably 9. So you got to stop down in here at 9. Imagine you're able to buy it at 11, catch a move all the way up into the 21, 22 area, right up in here before it pulls back. I'm not saying, oh yeah, you would have bought it here and sold it up here. Nah, that's bullshit. But first major pullback right here is probably where you would have covered. Buying it at 11, getting out at 22, 23. That's a nice trade. You'd take that. You'd be risking 3 ticks to get 22 ticks, because it moves in half ticks. So again, this video went a bit longer than I expected, but I hope this answers some of your questions on the Delta Scalper and how to use it, how to play around with the settings. But again, I don't vary the settings. I try to keep the settings. There's only 3 things you really got to mess around with. Is the look back filter. If you want it on or off, I prefer to keep it on. and the delta strength. Either 1 or 2. I don't really get into strengths of 3, 4, 5, or anything like that. But me, I tend to keep it at 1. But after talking to a few people recently, I'm seriously considering 2 as well on other charts. So again, it really comes down to your risk appetite. I mean, that's what people don't understand. They just think, well, I'm going to start trading, and they don't have the mental makeup for it. I see that all the time. People think that every trade on order flow that they take has to be a winner. No, it's not like you go to the bar to with your mindset, I'm going to go meet a woman tonight, and it's going to be the one I'm going to marry. No, on the first time you go out, and it's not like that, right? It's a numbers game in a sense. You got to keep going back till you find the right one, unfortunately. But in trading, it's the same way. So don't get caught up in the thinking that, I got to have 80% winners. I got to have 90% winners, and if I don't, it's a scam. It's a failure. No, it's not. The Pareto principle: 80% of your profits come from 20% of your trades, and that's just how life goes sometimes. So if you found this helpful, great. If not, okay. You don't have to write nasty comments on here. Just say hey, thumbs up or whatever. I don't care. I do this for my own self, and I do it for the users of my tools. So thanks everyone. Have a great day. Bye bye.